All right, everyone, welcome back for the episode of Carnivore Trades. Today's November 22nd, 2024. Not sure if that's when the actual date is of this getting released, but that's today's date. Again, should have this out for you, I'm assuming sometime around Thanksgiving. Been talking about doing this video for a little while here on futures. I've been meaning to do it myself anyway, since a lot of my traders like, so I primarily trade futures in my live day trading room, and a lot of my traders have been interested in getting into it. I know some of you guys are as well. But anyway, if you like the content, please give me a like. The comments have been working lately very much. I appreciate it, guys. Definitely noticed the uptick in the subscribers and the view count, so thank you for that. I appreciate all you guys. And if you're not subscribed, subscribe to the channel. And if you're interested in swing trading or day trading services, come find me on carnivoretrades.com for swing trading alerts, analysis, and live day trading. Anyway, let's get into it. So futures here. So is this a video, like, is this going to be like a primer video? Not exactly. Yeah, a little bit. It's not, maybe like futures for beginners with a few tips. I'm not going to make this an hour long, because if I could talk here for hours. I want to try and get some stuff out to you just in, a normal video time, 15-20 minutes here. So let's get right into it here. So obviously you guys know what futures are. I don't think you need to explain that. The right to buy ES here, right to buy that S&P at a future date, right? And you're speculating on the price, just like an option. What are the advantages? Let's get right into it. The main advantage, by far, and it's really not even close, and just for this alone, it's beyond worth it. And that's taxes. So capital gains, short-term capital gains from stocks and ETFs are taxed at your normal income tax rate. The futures are taxed with the 60-40 rule. So 60% are at long-term capital gains, and 40 are at the whatever the rest is. So if you were to make 100K times, I believe it's right here. Yep. So let's just say you made 100K. Technically, I guess, yeah, it'd be 22. So either way, let's say you went up to 100,100. Okay, just to make it or 101,000, just so that it puts it at the 24. So times 0.24, 24,240. That's what you'd owe with stocks and ETFs. For futures, though, if you had this was your gain, we divide that by 2, and then we're going to do just half of that times 0.24. So there's 12,120, and then 0.25. What did I say it was? 55. Oops. 0.15 times 50,500. 75 is 75 plus 12,120. So 19,695 as opposed to 24,240. 19,695. So you're saving 4,500 a year. That's 4%. Like, it doesn't sound like much. That's 4%. That's 4.5%. I mean, if you had an asset that was netting you 4.5% a year and you didn't have to do anything, you'd be an idiot not to buy that, right? So you're doing nothing. You're going to take trades anyway. You're paying 4.5% more money to do it with stocks and ETFs. And this number goes, well, I just did it with 100,000. It gets way higher. It gets way bigger percentage-wise. The higher up the tax brackets you go. So that right there is a huge, 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 huge advantage. And if that was the only thing alone, that would be worth it. Secondly, capital losses. You can deduct 3,000 as per usual, but the 60-40 rule applies also. So you can get a little bit extra back when you lose. Also, if you're not a full-time trader, no wash sale rule, because it's mark to market. So at the end of the year, and it's not as bad now because there's all sorts of programs and stuff that you just punch it in and it goes right through. But years ago, your accountant would love you for this because they'd have to go through and every stock that you sold, they have to do all the math for it and then line it all up. It just, I mean, you'll be able to see everything that you bought and sold on the report, but it doesn't matter really. It just says bottom line, did you make this? Okay, that's what you made. Oh, that's what you lost. That's it. So very simple and no wash sale rule. Also, for a small account, guess what? No day trading minimum. You don't need 25K to start. So if you have a small account and you want to get started with 10 grand, 15 grand, whatever, you can do that. In fact, margins are actually pretty good on a lot of sites. And I mean, you could start with 5,000 really if you wanted to. You just wouldn't be able to add to your positions and you just wouldn't have a lot of flexibility, but you could do it. So mark to market, taxes, massive advantage. It's just massively underrated. Second thing, it's very easy to calculate sizing. So for instance, SPXL, I'm just going to keep using this as an example, but like, at 120 on August, this is only 3 months from now, right? Back in August, it was 120, it's 178 now. So if you bought, however many thousand share, like let's say you bought, again, just to keep it simple, you had a 100,000 shares or $100,000 divided by 120. So you got 833. Now, if you wanted to use that same capital, you'd have to, do the math here. 170 was it 176? So there's 568. It's not like it's that hard to do, but when you're day trading, you know how this is. Like you don't want to have to take extra steps. You just want to be able to go. Like you can't afford to be wasting brain power on, oh, how many shares should I put in? So it makes it a lot easier, right? One contract is always going to be, ES. It's always going to be $50 a point, $12.50 a tick. If you're using micros, it's 1/10 of that. So $1.25 and $5. And it never changes. The one caveat is that, obviously 1 point at 5,300 is worth, 1 point is easier to gain on a 5,900 than at 53, right? It's a different percentage, so the points are going to move faster. So you have to think about that, but it shouldn't really make that much of a difference on a intraday basis. You know what 10 points is going to equal out to every time. So if that's what you're looking to scalp and so on and so forth. Other advantages, no decay. So you're not going to get, look at TQQQ, highs, lower highs, and then obviously NQ is really had a double top there and now it's close to the high. So no decay with the triples, no decay with options. Right? You can buy an option or you can buy futures here. Let's say you bought right here. Let's say you bought the top. You're in the money, right? But if you bought SPY calls here, chances are you're underwater on those, depending on what expiry you got. So big difference there, especially if you're day trading. You're probably not using anything past like a week or two. So it's kind of nice to have that. They're also very easy to sell overnight. So again, it's another thing against options. I always tell my guys all the time, oh, CPIs tomorrow, be ready early tomorrow because I'm going to be trading that. We'll get big moves off the CPI. You can't trade options during that. And, ES is liquid as rainwater, NQ is liquid as rainwater. You can also catch overnight moves. And if let's say you went long and, let me see, trying to think of something that was like recent. Like let's say gold. Let's say you put a buy order down at 25.50 and just pretend this happens at like 2 in the morning. That might fill. Whereas if you waited till the open, you had to pay up for it. So you can get exits when the rest of the market's asleep and not there. Now the other side of that is you can get stopped out overnight. In fact, the algos hunt those things all the time. So you just have to understand that as well. But usually it does work out as an advantage. You can also use a lot less capital. So, if you're looking at SPY, right, let's say you have, again, let's just say you have 100K to put into SPY, divided by, what do we have, 595, 168 shares. Or sorry, but you get 4 times buying power. Let's say you use almost all of it. So there's 350K, 588, and then let's say it moves $1. So you made $588, right? With ES, I mean, what's like 16K, depending, for margin. And you could probably use like, just say, even one, yeah, even one ES contract, 50 times 10 points is about $1 on SPY. There's 500. That's on one ES contract where your margin might only be like 16, 15,000. So you're, it's 95% less capital up front. And even with SPXL, it's still much less. SPXL is not marginable in that way anyway. So, but that's another big advantage. Big advantage. Another thing, bonds. Everybody knows about TLT, right? Or even TMV, TMF. They work, but what's the long end, right? Tips, like that's it, or excuse me, the short end. So this is the thing that's like closest to the 2-year yield. And like 107 to 110, it's like not even 3% here. But with ZT, this move is big money. So it's a lot easier to trade the short end of the curve with bonds. So it gives you that advantage as well, which there's not a lot of good ETFs for doing that. So that's a huge thing. I love trading bond futures, do it all the time. So another big advantage there is you're not limited to those just ETFs that, to TLTs and stuff like that. So those are some really good reasons as to why people like futures and why I like them. And the more as soon as I got into them and kind of like got used to them, it's really easy to not like want to go back, honestly. That said, I still trade stocks. I still have, I still use capital to trade stocks, individual tickers. Every now and then I'll trade SPXL over ES or maybe SPY over ES. If I have, say, like sometimes in the trading room, we'll buy like a swing, like a starter position in ES, and maybe we'll have money and like we're in the money on it, right? And then like let's say we want to scalp short. I'll use SPXL or I'll use SPY. So we have a swing long that we're holding, but we also see a scalp here that we can take. We'll do that. The other time I would do it, we did it not that long ago. It was on QQQ. Actually caught the low of the day perfectly. I think it was right here. It was the 23rd of October. But we were knife selling that day, and I said, I don't want to put the margin up because we're knife selling, so I just used QQQ. I still used leverage, but I just didn't use nearly as much. So it's not like I won't do it, but 99% of the time I'm trading futures. And in case you're wondering, you don't need futures. You don't need to trade futures to be in my room. I have people who trade options. I have people who trade SPXL, TQQQ, and such. I just prefer trading them. So anyway, so that's pretty much the advantages there. Some other tips to help you get started. Make sure before you choose a broker, check commissions and stuff like that. That those can add up. If you get like a broker, like Schwab is notorious for being really bad with commissions, and pretty much from the most part, from what I can see, anybody that's like a big name dual broker, like I haven't used IB, I haven't heard any bad things, but definitely with Schwab, like the advantage is it's nice because you can have like a pile of money in there. Let's say you got 100K, you've got 50,000 in stocks, and then you've got 50,000 in cash, whatever. You can use that 50,000 to buy futures, and it just pulls it out of the your margin account. So it doesn't like you don't have to like transfer money and then like go in and buy. It's already nice and convenient, but the commissions are really crappy. And again, that can add up over time. If you're trading, if you're active, like if you're a scalper and you're taking 10 trades a day, that adds up. You could be adding, a couple again, like with taxes, it can add up to a few percentage points a year, that you're just pissing away for free. Like if you're gonna trade anyway, you might as well get the cheapest thing. And it doesn't look like oh, $1.50. What's the difference between $1.50 and $1? Matters over time. So consider that. Just check the commissions of brokers. You want some. I'm not gonna give too much out here because these companies don't need press. They're not paying me. But like Trade-Evate is pretty good. Tastyworks is pretty good. I've heard good things about StoneX. I've heard okay things about IB too. I just don't know how their commissions are. TradeStation's another popular one. Just do your research. But for the most part, just check that stuff, and you should be okay as long as you're with a reputable broker. So anyway, couple other tips. This is kind of it's not really doesn't really matter to futures specifically, but when I say swing trade futures, you typically like want to drop. You can swing trade futures. The people think like it's crazy, but it's like, I guess one friend of mine was asking me, how do you sleep at night? I'm like, well, I don't put like the same amount of capital into futures overnight as I would a scalp. So if I'm looking for 10 points on ES, right, like 10 contracts is not out of the question. I would not do that overnight though, right? So I might use 2 to start with, or I would use micros to start with. We'll talk about micros in a second, but so the swing size, you can do it. Just think of it as a swing trade. So 10 points. If you're looking to make X amount on 10 points or for a scalp, think of it as like 50 to 100. So size down by 80 to 90%. But yeah, you can do that. I do it all the time actually, and that's how I catch a lot of trend moves here. And that's how we've had very nice ones this year, especially on the Russell, NQ and ES. We've had a lot of them this year. So you can do that. If you have a small account though, and you can't add to your position, and you don't have a lot of margin breathing room, then just use TQQQ until you build the account up, or SPXL, whatever. But yeah, definitely size down. It's something that can be done, but just be aware of that stuff. Also be aware of liquidity. So I get questions about like, Aaron, what about like lumber futures or cocoa or like palladium? You can, if you want to. I'm not saying you shouldn't or can't, but you better know what you're doing, because like any of these thin commodities, like uranium's another one. Not a lot of brokers even offer this, but like look at this. Like if you trade this, like there's cocoa. It does this for a reason, because it's not as liquid. It doesn't really trade as heavy, so you can get run over. Just be aware, what you're trading before you get in. Be aware of the liquidity. If you trade, if you trade ES, NQ, RTY, YM, gold, silver, you're gonna be fine. Oil, you're gonna be fine. But some of those other like obscure commodities, you trade at your own risk, or get a commercial sized 9-figure account and then do it. Then you can do what you want. Couple of things. So micros, let's talk about that. A lot of people think like, oh, I can't put that much, ES, I can't do that. $50 a point. Enter micros, MES. There you go. So you got same exact thing, same exact amount of liquidity, right? Moves the same way. It's up the same 0.29 basis points, 0.29 basis points, 1/10. So you can absolutely, with a small account, trade futures. It's $5 a point, not 50. Same thing with NQ. Instead of 20, it's 2. MGC gold, I believe it's like $1 instead of 10. Right. That's same thing with silver. Same thing with MCL, mini crude. SIL is the silver. Copper, MHG. So you can absolutely trade smalls on this, and with a small account. So I definitely encourage people who are maybe turned off because you think that you can't, you do it, you can. So just be aware of that. Good tool to use. I'd always advise starting small anyway, even if you have a large account, just so you get a feel of how they trade. Another great thing that you can use with micros, and here's where we come back to commissions. Here's where you might get dinged a little bit, but it can be worth it. So let's say you're trying to swing, like I said, let's say you're looking for a 150 point move in ES, but you don't want to just, let's say you only have like enough capital to buy like one ES contract. But you don't want to do that, right? Because you want to be able to scale out and you want to be able to add to it easily if you need to. Buy 10 micros. It's the same exact thing. And that way you can sell chunks on the way up and not, you can catch that whole trend move. So after 20 points, 30 points, you can lock in a gain and then you can ride the rest risk free. Sell a little bit more after this, sell a little bit more later. So use that to your advantage, especially if you're like, maybe medium size account, we'll call it. 10 micros is one of these, and I'm not sure what each of the micros is a little different as far as commodities are concerned, but it is a good tool to use. So I definitely recommend doing that. You will pay a little bit more in commission, but it is worth it if it works. So a couple other things, lastly, to look at. Tickers to use and avoid. Avoid anything vol related. I think it's a scam. the amount of capital you have to put forth. By the way, this rolls every month too, so you don't have a lot of time before you have to roll, which costs money. Like, yeah, you could have made like 14. If you got the exact low to the exact high, you probably could have made like $2,000 or so off of one contract here. But why not just short the ES? The amount of capital that you have to put up to buy VX, it's not worth it. I don't like it. I would much rather you just short ES instead. And then there's times where ES goes down and then VX, you know how the VIX doesn't go down? Now you're just burning away money. It's just not good. I don't like it. The only way it's worth it is if you get a huge trend move. Right? Like if you catch the October 30, like you catch like one of these big legs here, but one of those, then it pays off, but it's not very good inverse. I just don't really care for them. Plus you take on vol decay risk, so there's always that too. VIX crush, all that stuff. Certain things to look at, or should say, one last one to avoid: Bitcoin futures. I think they're a scam. It's just not worth the amount of margin. You'd be better off just buying one Bitcoin. I just don't think that there's that much in like it. You can go to Coinbase or like any of those other brokers and get way better rates and leverage. So than the CME Bitcoin futures. So like Bitcoin futures themselves, I'm not saying you can't trade those, but the CME one, this thing, I don't like it. They do have micros on this too, by the way, and it's still just, if you don't have money in your account and you want to scalp something, you don't have money in your crypto account right away and you want to scalp something, sure, go ahead, but I don't think it's good for swinging. This also rolls every month too, so that makes it tricky. And even more importantly, if you get, like, let's say you were short here, 11.8 to 11.11, you're locked out over the weekend. So they can just bone you and you wake up to go to a margin call on Monday, right? Margin call Monday because you weren't there. You couldn't stop out over the weekend. It's not worth it. So I think avoid that. Other things. There is a Nat Gas mini. There's two of them. One of them is QG. The other one is MNG. I think MMG is better. It's less margin and it trades. The spreads are not great, as you can see, but QG is a 5-cent spread always, so it's locked. the one thing I notice about this is it's a little more liquid, but you're basically comes with a 1 cent loss because you're going to have to pay 5 cents to get filled if you want to get filled really fast on both ends. So definitely do not scalp with this. I wouldn't scalp with this either. I just don't think it's liquid enough. But those are two valid for swinging if you want. I'll put it down in the description, all the commodities, but that I think are okay to trade: MGC, SIL, MNG, MCL. There's even a ZW doesn't have that. This is wheat. That doesn't have that much margin, but there is an XW, and I think there's a soybean too. There's actually corn. That's a mini corn or a micro corn, and I think that's soybean. So there's micros for everything. Russell 2000, M2K. So there's micros for pretty much like everything that you need. So again, it's pretty friendly to new users. There's even some brokers that allow nanos, which I think are even smaller. So if you're worried about like, oh, I can't, this isn't for me, it's not going to work. It can work. You'd be surprised. So, but those avoid. I don't like Bitcoin. I don't like vol futures there. So anyway, I'll wrap it up here. Again, hopefully that helps everybody. If you guys got questions, feel free to ask me in the comments. It's just, trying to do a little video here on kind of an intro, kind of a primer, reasons to own or reasons to trade them, and just some good things to know here. As I know this is it's kind of a mystery to a lot of people, but it's once you get used to it, it's really actually it's something. For me, it's definitely my preferred way of trading now. So, but anyways, guys, you guys have a great rest of your week. Take care. Come find me on carnivoretrades.com. I'll see you guys all next time.